What if I told you a missile launched thousands of miles away could make your gas bill higher, your groceries more expensive, your investments more volatile, and even affect your mortgage rate? It sounds unbelievable, but that's exactly how today's global economy works. Whenever tensions rise in the Middle East, financial markets across the world react within minutes. Oil prices move, stock markets swing, gold often surges, and millions of families end up paying more for everyday essentials. So how does a conflict happening far away end up affecting your wallet? Let's break it down. Why the Middle East matters. The Middle East produces a significant share of the world's oil. It also sits near some of the world's most important shipping routes for energy supplies. When conflict increases uncertainty, investors immediately worry about possible disruptions to oil production or transportation. Even if supply isn't interrupted, the fear of disruption alone can move markets. And because oil is used to transport goods, manufacture products, and power industries, higher oil prices can ripple across the global economy. Why gas prices often rise. Oil is one of the world's most traded commodities. If crude oil becomes more expensive, fuel companies generally pay more. Transportation costs increase. Airlines face higher expenses. Shipping companies spend more on fuel. Eventually, consumers may notice higher gasoline prices and increased costs for many products that rely on transportation. The exact timing and size of price changes depend on many factors, but energy markets are often among the first to react. What happens to the stock market? Stock markets dislike uncertainty. During periods of geopolitical tension, investors sometimes reduce exposure to riskier assets. Technology and growth stocks may become more volatile. Meanwhile, sectors such as energy, defense, and utilities may perform differently depending on market expectations. At the same time, some investors move money into assets they believe are relatively safer, such as government bonds or gold. Remember, every conflict is different. Markets don't always move the same way. Investor expectations, economic conditions, and central bank policies all matter. How inflation can follow. When transportation becomes more expensive, businesses often face higher operating costs. Some companies absorb those costs. Others pass part of them on to consumers. This can contribute to broader inflationary pressure over time. If inflation remains elevated, central banks may decide to keep interest rates higher for longer or adjust policy depending on economic conditions. That can influence borrowing costs, business investment, and consumer spending. Why gold often makes headlines. You've probably heard people say, "Buy gold during uncertain times." That's because gold has long been viewed by many investors as a potential store of value during periods of economic or geopolitical uncertainty. When global tensions rise, demand for gold sometimes increases. But just like stocks, gold prices can also rise or fall based on interest rates, inflation expectations, and investor sentiment. There are no guarantees. What should ordinary people do? The biggest mistake many people make is reacting emotionally. History has shown that markets often experience periods of volatility during major geopolitical events. Instead of making impulsive decisions, consider focusing on a diversified investment portfolio, long-term financial goals, emergency savings, avoiding panic buying or panic selling. Staying informed is important. Overreacting is usually not. Conclusion. Middle East conflicts don't just affect governments. They can influence oil prices, inflation, gasoline costs, stock markets, and ultimately, household budgets around the world. Understanding these connections helps you make calmer, more informed financial decisions, no matter what the headlines say. If you found this video helpful, don't forget to like, subscribe, and turn on notifications. Here you'll find simple explanations about investing, insurance, banking, personal finance, and the global economy, so you can make smarter money decisions. Thanks for watching, and I'll see you in the next video.